Money matters, not for the finer things in life, but for the freedom it provides you. When you invest, you are buying a day that you don't have to work. Hello, welcome back to the podcast. Today we are talking about two books. It's going to be specifically focused on investing. The first book is Girls That Invest, and the second book is Rich Dad Poor Dad. But again, this is going to be specifically investing. But if you want another episode of Rich Dad Poor Dad, specifically talking about the principles in the book, I can definitely do that. I also want to state that I am not a financial advisor. I would actually consider myself very much a beginner on my investing journey. If you have any books or resources, or if I even get anything wrong, I would love to know so I can also grow and learn as well. I have linked the book information down below if you're interested in reading more. I also have my notes in front of me, so I don't go too far off track. And let's get started. So I remember in my early teens, no, actually late teens, early 20s, I learned, or I would hear people talking about Bitcoin and investing. And I never really considered it for myself. I didn't really understand it and wasn't really interested in it, especially that focus. My focus was going to college and making money that way. But it wasn't until last year, like less than a year ago, where I really wanted to start learning in how to invest. And these were the two books that I read on it. When I read Girls That Invest, I read it in a single day. I was just so excited to get all the information and get started. So I'm going to go through some of those lessons from that book first. You don't lose money in the stock market unless you sell your shares for less than what you paid for them. In other words, you only lose if you sell. Growing wealth slowly can sound painful. The excited part of you wants to see the results now, but the wise part of you knows you need to get the foundation sorted first. So the author suggests before you start investing, 1, have a budget to know what is going in and out, stating if you can't track something, you can improve on it. But she also wants to remind us that there is no joy in living in a life where you deprive yourself of every small joy just to serve your future you. Future you needs to be taken care of, but also allowing yourself to enjoy the moment and live in the present. So the first one is the budget. Creating a budget, knowing exactly what you're paying for. If you're not using any subscriptions, this is the time to delete those. Number 2 is paying off your debt, specifically the high interest debt first. So I remember I had 2 credit cards when I would study abroad and like in college and everything, and I didn't realize how high one of my credit card interests were. I was paying probably $500 a month in just interest. But of course, I was paying that because I just didn't know. I wasn't knowledgeable on it. And I know this is very painful when you just want to start investing. You don't want to wait until, oh, I'm paying down off my debt, or you have probably so much student loans or something that's like, oh, I want to start investing now. So I can definitely understand that you want to start both. This is just what she suggests. Number 3 is automate your money. So every time you get paid, this amount or this percentage goes here. For example, I know every single time I get paid, I know that 10% is going to savings. Number 4 is create a savings account. The author recommends 3 months of expenses. I would also recommend talking to your bank about a high yield savings account because a lot of savings account, at least that I know of, have like 1% maybe. So if you get a high yield savings account, your money is sitting there, but it's actually growing as well. I personally use the Robinhood app and I use Robinhood Gold. It's $5 a month. I know the percentage varies, but right now I think it's 3.35% APY. So if you have $5,000 in your Robinhood savings, subtracting the monthly fee, you would make just under $9 in profit a month or about $107 a year. And you can compare that to a 1% or what is a normal? I was just interested and I looked up what is a normal APY for a savings account. It's about 0.39% APY, so extremely low. So I definitely recommend trying to get a higher APY just because your money's going to be sitting there, might as well make something from it. So you'd only be making $20 a year if you had a 0.39% APY compared to the 107. So definitely just something you can check out if you're interested. Also, many companies offer 401ks. And if you're able to, one of the investors in the book recommended matching whatever they match. And so if they match up to 3%, try and put 3% if you can. I know not everyone can put away that kind of money, but if you can, is what she recommended. But another one of the investors said you don't need to go past that match. So say they match up to 3%, just use that 3% and put the rest into savings, into investing, into paying off debt, and just do up to what they match. So if they match 3%, don't go up to 4%. Just match that 3%. Again, these are all just suggestions. You're definitely allowed to do whatever you want with your money. So these are the 4 steps that allow you to have a good foundation before starting to invest based on what the author says. So we'll go through it one more time. So the one is knowing what's coming in and out, so making a budget. Number 2, paying off all your debt. Number 3, make automated systems in your account. And number 4 is create a savings account. I also just recommend getting her book. I personally have her book. It just goes into so much detail and on the definitions and meanings of the most popular investments, such as stocks, bonds, mutual funds, if that is something you're interested in. So for me, I'm just going through some of the beginner options. And I believe it's something you can just read over and over, almost like a textbook. I think she just makes it very easy for people to understand. The most common indexes based on her book are the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. So when you start investing, you will start to see the market go up and down. That's just natural. Okay, that's just what happens. And so she makes it a very big importance that when you start seeing things go down, do not sell. Again, you can only lose if you sell. They know this. And so they don't worry if it drops. For example, so say SPY or VU, I remember I would look at it and I was like up $10, right? And then I look at it the next day and it was down $10. But it doesn't matter. Like, I'm not selling right now. I'm not even worried about it right now. This is for long-term investments. And so just don't worry about it. Investors in training is what she calls us in the book. Investors in training usually check their portfolio once every month or once every quarter. Investors increase their earnings by trading less frequently. There's a popular phrase in the world of investing called buy and hold, and it's popular for a reason. She also talks about the lazy investor. So you put in your investments every paycheck or every month or every quarter, or however you're doing it, and you basically just don't worry about it. So it's like, oh, you put it in, and then you don't track it. And the 3 funds for a lazy portfolio she has is 1, a broad US market index ETF. This could be VU or VTI. Number 2 is a broad international market ETF, an example being Vanguard Total World Stock Index Fund ETF. Number 3 is a bond ETF, example Vanguard Total Bond Market Index Fund ETF. She also has this graph and examples on how you can invest based on your age. For example, for me, it would be about 75% stocks and 25% bonds. Up to 95% of day traders fail to make a profit. This is based on her book. Investors in training know that the wealthiest investors in the world grew their money through the buy and hold strategies, not through day trading. Now on to the Rich Dad Poor Dad book. In his book, specifically talking about investing, he focuses a lot on IPOs, which are basically businesses that eventually go public. And I really wanted to start using investing and stock market as a way to get rich quick, especially when I first started. And the author talks about how he would buy IPOs and then take them out maybe after 1 or 2 weeks. And the Robinhood app will let you know when a company is going public. And so I bought IPOs in high hopes of making, money fast. But of course, there's a lot of risk with IPOs. I remember I bought KLAR or Klarna. And not saying it will never go up, but I believe, please correct me if I'm wrong, about 70 to 80% of IPOs fail. So for someone who may have money to spend on IPOs and not worrying about if their money is lost, that would be a great way to invest. But for people who are maybe lower to middle class, like I am, I personally don't just have that much money to lose. So I think the lazy investor strategy is best, and growing wealth over time is personally better for me. Again, this is your money, so do whatever you want with it. Yes, IPOs do have a high risk, but there is potential. I don't know what the percentage is technically, to really get rich quick, but people have done it. So if you want to take that risk, you can. But personally, I prefer the lazy investor method. So Warren Buffett says if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. So a lot of these wealthiest investors have taken decades to grow their wealth. It isn't overnight. It's an investment. Millionaires think in decades, not days. And in the Rich Dad Poor Dad, there are other points that are really good, such as learning the difference between asset and liability, how we should invest in learning more about knowledge, and making statements like, instead of saying, I can't afford this, say instead, how can I afford this? But for specifically investing purposes, I prefer the Girls That Invest approach, specifically the lazy method. I also say the IPOs created a lot of stress on me. Like I would look at it every day because IPOs, I was just waiting for the day that I could sell it. I ended up losing money. which again is my own fault, but it was just like another stress on my day. Seeing the numbers go down. But things like VU or SPY or VTI or anything like that, I don't worry about it going down. So for me, why add another stress? That's another reason why I like the lazy method. I don't have to worry about it. Again, I use the Robinhood app to invest. It's a great way to start. Of course, if there's like a better way to start investing, I would love to know. I do have a link down below. It is not sponsored in any way. This is just the Robinhood app. I believe you'll get like $5 if you use the link, so you can start investing today. But yeah, this is not a sponsor. But yes, that is all I have for today. Like I said, I am still very much a beginner. I would not even consider myself even close to knowing anything about investing. I'm very glad that I am now able to invest and work towards that for my future self. But it's not a race. Don't worry about being perfect or having everything figured out. I hope this is able to at least get you started on investing. And I hope this is able to help you or someone you love. And I will see you in the next one.